You are listening to 100 Wealth Building Secrets with James Marshall. James Marshall is a registered investment advisor and president of Marshall Wealth Management. His registered investment advisory firm is registered in Texas and Kentucky. For 30 years, he has been educating, advising, and managing wealth for diverse families all over the country. This podcast is about different concepts of wealth building, some financial, some emotional, physical, and yes, some spiritual. The bottom line is you will leave with some knowledge, and knowledge is wealth. So whether you're walking, running, exercising, or having your choice of beverages, no judgments here. Clear. Then open your mind and get ready for some life-changing financial lessons. It's your time. Here's your host, James Marshall.
Welcome, Wealth Builders, to podcast number 77. If something seems too good to be true, it probably is. Today, we're going to be talking about how to avoid investment offerings that appear to be too good to be true. So-called pyramid schemes are some of the worst offenders because they really count on the concept of FOMO, fear of missing out. Look at what I'm driving. Look at how much money I'm making on this investment I'm in. Look at all the other people who are in on this. Do you want to miss out on all this? That's what you hear your friends or the people who approach you saying. Oh, and it sounds very tempting. They look very successful, but all the glitters ain't gold, and all money ain't good money. When you don't see clearly what the product is that you're selling or that is driving all the revenue to the system that they're talking about, then you are the product. Pyramid schemes depend on the base or the new investors or new members getting wider and wider so it can support those at the top. They stoke your greed so that you work hard to move up to a safer level. However, it's the ones at the very top that benefit the most before it all comes crashing down. Then they move on to the next scheme. If you've ever been approached with an investment opportunity that seems too good to be true, it probably is. Scammers are always looking for new ways to take advantage of people. And investment scams are one of the most common type of scams out there. I want to share with you some examples of past Ponzi schemes and other documented investment frauds that you might be aware of. The granddaddy of them all, the one that was in all the newspapers, the news shows, and even has a couple of movies, is the Bernie Madoff Ponzi scheme. Bernie Madoff was a stockbroker who ran a Ponzi scheme for decades, defrauding investors out of approximately $50 billion. He promised investors high returns with little or no risk and used their money to pay off previous investors as well as fund his lifestyle. Then there's Alan Stanford. Alan Stanford was a banker who ran a Ponzi scheme that defrauded investors out of about $7 billion. Now, his approach was he promised investors high returns on CDs or certificates of deposits, but used their money to fund the lavish lifestyle he was living and pay interest to other investors before it all caught up with them. Lou Pearlman, you may not know this one as much, but Lou Pearlman was a music producer who ran a Ponzi scheme that defrauded investors out of $300 million. He promised investors high returns on investments in his business, but he used the money to pay off previous investors and fund his lifestyle. There was no profits there. It was just moving money around from one hand to the other hand. You're probably aware of Enron. Enron was an energy company here in Houston that collapsed in 2001. After it was revealed that the company had been using an accounting fraud to show success. Enron executives used accounting loopholes to make the company's earnings appear higher than they actually were, and then they sold their own stock at inflated prices. WorldCom is another one. WorldCom was a telecommunications company that collapsed in 2002 after it was revealed that they also were using accounting frauds. And those executives actually were using those loopholes to push up the value of the stock, and then they sold their stock at inflated prices while the company was in fact failing. Now, these are just a few examples of past Ponzi schemes and other documented investment frauds that you may or may not be aware of. And they're very well known, and usually millions of dollars and billions of dollars were involved. You're probably thinking, well, what's it have to do with me? I only have $200 or $1,000 that I have at risk here. Well, there are a lot of marketing schemes that are set up just to take your money away from you. And these are called MLM, or multi-level marketing concepts. Not that all of them are bad or illegal, but a lot of them are schemes, such as friends and family and Forex. Now, MLM, or multi-level marketing scams, are a type of pyramid scheme where participants are promised high returns for recruiting new members and selling products or services. However, the vast majority of the MLM participants lose money. Now, some examples of MLM companies that you may be familiar with: LuLaRoe. LuLaRoe is a clothing company that uses an MLM scheme, and the participants actually sell LuLaRoe clothing to their friends, family, and online. However, many LuLaRoe participants lose money, and the company has been accused of being a pyramid scheme. Herbalife. This was in the news not too long ago because two billionaire hedge fund investors were caught up in court. One was suing the other for their belief that Herbalife was a Ponzi scheme. Herbalife is a nutrition company that uses a MLM scheme, and the participants sell the products to their friends and their families, and they sell them online. However, many Herbalife participants lose money, and the company has in fact been accused of being a Ponzi scheme. Now, a lot of people do well in Herbalife. It's been around for years, but the fact still remains: where there's smoke, there's probably fire. And of course, Amway. Everyone knows about Amway. Amway is a consumer goods company that uses MLM schemes. Participants sell Amway products to their friends, their family, and online. But most participants lose money, and they have in fact been accused of being a pyramid scheme. Now listen, I am not saying that these companies are illegal pyramid schemes. However, it is important that you fully understand and that you are fully informed about the pros and cons before you commit to any of these companies. Forewarned is forearmed. Forex scams are another type of investment scam that can be used in an MLM scheme. Forex is a currency trading platform that has really caught on over the last few years. These scams often promise investors high returns for trading currencies. However, the vast majority of Forex traders lose money. So you just have to be aware. The best way to protect yourself from investment scams is to be educated about them. And I want to share with you a few tips that you can consider when looking into any type of investment. Be wary of any investment that promises high returns with little or no risk. If an investment opportunity sounds too good to be true, it probably is. Do your research before investing in anything. This includes researching the investment vehicle, the company offering the investment, and the person or people who are trying to sell you the investment. Get everything in writing. This includes the terms of the investment, the risk involved, and your rights as an investor. And finally, be wary of high-pressure sales tactics. If someone is trying to pressure you into investing quickly, that's a red flag. Take your time and think about it before you make any decision. Sleep on it. Pray on it. there are a few key things to look out for when evaluating an investment opportunity. One is high returns with no risk. I mean, that should be common sense, right? This is a classic red flag. If anyone is promising you high returns with little or no risk, they're lying. All investments carry some degree of risk, and there is no such thing as a guaranteed return. This is not to be confused with guaranteed interest. Another is pressure to invest quickly. Scammers often try to pressure you into investing quickly, making a decision right then and there without giving you time to think about it. This is because they know that if you have time to think about it, you probably are more likely to realize that it's a scam. So keep that in mind. Unlicensed or unregistered investments. If someone is offering you an investment that is not licensed or registered with the Securities and Exchange Commission, the SEC, that's a big red flag. Licensed and registered investments are subject to certain regulations, which helps to protect you, the investor. And then there's complex or difficult to understand investments. If you don't understand how the investment works, that's a red flag. You should only invest in things that you have some level of understanding. I'm not saying you need to understand all of it, because who wants to sit around learning things that investment advisors do all day long? However, you must have some understanding of how it works. There should be written summaries or guidelines or detailed explanations that you can review regarding the investment to help educate you on how it works and why it works for you. If you see any of these red flags, it's best to err on the side of caution and avoid the investment. There are plenty of legitimate investment opportunities out there, so you don't need to take risk of investing in a scam. There'll be other opportunities. It's one thing you can always count on. There's always another opportunity. When you establish a comprehensive financial plan, it helps you to understand what type of investments are better suited for you according to your risk tolerance, according to your time frame, and according to your financial position. Investments should not be based on emotions. They should be based on the concepts and goals outlined in your financial plan. I always say the key to building wealth is planning. Listen, if you think you may have been a victim of an investment scam, you should report it to the SEC immediately. You can also report it to the Federal Trade Commission, FTC, and your state's security regulator. I hope we said something you can use. That's all for today's podcast. Thank you for listening. And if you have any questions about investment scams or personal finance in general, please feel free to contact me. And until next time, keep building wealth. Peace.
You have been listening to 100 Wealth Building Secrets with James Marshall. Keep increasing your knowledge by going to marshallyourmoney.com and check out our educational videos, newsletters, and calculators. There you can also sign up for your free copy of his book, 100 Wealth Building Secrets. Like this podcast and follow it on podbean.com. You can also follow us on social media platforms: Facebook, Black Family Wealth, Twitter, James Marshall at Marshall Wealth, Instagram, Marshall Wealth, LinkedIn, James Marshall, and on YouTube, James Marshall Financial Educator. Email your questions or thoughts to James at marshallyourmoney.com. Thank you for listening. And remember, we build wealth one family at a time.
Money, I know you can. I teach you how to save. Don't waste your money, but bank your money. Don't spend your ends. I teach you how to save. Your bank account will be spilling out with them dividends. I teach you how to save. Well, number one, if it ain't making money, it ain't making